Welcome back to Fast Market here on the Schwab Network. Let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, the Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. I'm excited to be here.
All right, good stuff. So we're talking CarMax. Stock's kind of consolidated recently, but it's still up nearly 30% so far this year. What kind of data are you seeing? Because it seems like inflationary pressures are taking hold. But maybe used cars are going to benefit from this UAW strike if inventory levels go down for new cars?
Yeah, I think that this UAW strike is going to be a major focus point, and especially questions from investors after CarMax reports next. And what we're looking at, heading into this report prior to this strike, we did see a couple positive signs for CarMax. First was that its web visits were increasing. So consumers who were, going to its site to shop around and look at pricing for its vehicles, those were up by about 26% year over year. For us, this is a positive sign that, demonstrates how CarMax is leaning into its omni-channel offerings. This is kind of how it differentiates itself from a lot of other peers by allowing consumers to shop where they want to shop. And I think that this is, supports continued expansion in its digital sales. Another positive point heading into this earnings is whenever we look where CarMax sits next to other peers, the two that we used for comparison in our universe for this presentation is AutoNation and Carvana. It's at the top of the list when it comes to consumer happiness. And we know that long term, that tends to be one of our strongest indicators for future growth is that consumer happiness levels. And so 68% positive and also leading peers, that's a good sign. That's another check in our box for CarMax as we head into this. I will say mentions have somewhat tempered. I think a lot of this has to do with overall consumers making fewer big purchases. You have rising or still high rates, especially for consumers who are getting these auto loans. And we know that these used rates typically are higher than the new car rates. But now in the realm of this UAW strike, CarMax could be a potential beneficiary. We saw used car demand really surge during COVID whenever supply chain and manufacturing hurdles, kind of stunted that new car inventory. And so if we start to see this trickle through, you could see a nice boom and a nice resurgence in used car demand, which could benefit a company like CarMax.
All right, Megan, stay with me here because I'm going to take you on a little journey, okay? When volatility hit the car markets and you couldn't buy a new car anywhere and you only could buy a used car, they underachieved, right? They're doing better now that used cars have become less volatile and more stable. They can buy them here, they can sell them there. Everything seems to be getting better. More volatility comes to the car market. Are they going to be able to I get the common sense reason why they should outperform, but they don't, Megan, when that happens. Explain to me how they can keep doing well if volatility hits, where they have no track record of doing well when volatility hits.
That's a really good point. I think I remember even talking to you guys, a few years ago whenever we were discussing CarMax. And I will say a couple of things have shifted in our universe. We have seen sentiment improve. We're seeing them outperform. Hopefully this is a company that's learned, has allowed history to be a teacher and is now better suited to navigate those choppy waters. But it's definitely a point of uncertainty. And so I think that that's important to be aware of that, we'll definitely be watching for CarMax to be able to sustain these sentiment levels and to be able to handle potential volatility, especially when it comes to pricing and how they're managing their own inventory as demand surges. So definitely a lot to watch here, but this is a potential tailwind for CarMax if they can capitalize.
Yeah, that has to be.
That's going to be good commentary on this, because the problem that they had 2 years ago was there were no used cars for them to buy. Nobody was selling used cars back to CarMax and getting a new car because you couldn't get one. So that was hopefully they saw this UAW strike coming and have started loading up on inventories in case this thing gets extended a little bit. But we'll have to wait.
That sounds like That sounds like a prescription for disaster right there.
Yeah,
Loading up on inventory.
Strike ahead, and then they'll have over inventory. But Megan, when you look at this one, you know, they've got some competitors in this space, Carvana, AutoNation, some other small ones, but you know, this is the cream of the crop according to the street and, you know, according to their numbers, but you're going to see year over year and comparables really pull back. Do you guys have any data that, hey, they're still knocking the pants off of all their competitors in this space?
I think that happiness is our biggest, you know, kind of separation data point whenever you look at this, to see them a couple points ahead of AutoNation and Carvana, who, especially AutoNation, has typically had really high levels of happiness. So to see CarMax pull ahead here, I think that that's promising. I will say we do see a decline in overall mention volume year over year, just a little bit of weakness there. And so because of that, those kind of mixed metrics on our end, we're technically neutral ahead of this event. But, you know, happiness, like I said, that's our longest term indicator of potential growth. And we do see these potential tailwinds coming in. So we really like the same long term because we do see it outperforming peers. But we're neutral ahead of this event and also just aware of potential uncertainty related to this UAW strike.
Yeah, well, there'll probably be some commentary on there. You guys are neutral going in to this report. All right, great stuff. As always, Megan, appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio, breaking down the data for us. Kev, I mentioned it's up nearly 30%.